Hey everyone, how's it going today and welcome to another video. So in today's video, what I really want to talk about is pretty much about the stock market, but specifically the stock market crash that happened about 3 weeks ago. And because the reality is that right now at this current time period, we don't know what the future holds, but it is very, very probable to think, and we're going to talk about a little bit about why in a little bit, so definitely stay tuned watching, about why a lot of these crashes are expected or is very probable that they might potentially happen again. In other words, we might potentially see a second stock market crash after the first one that happened about 1 to 2 to 3 weeks ago from the release of this video, or from depending on when you are watching this. This is going to tie again also to what's going on in Japan, because in Japan the Japanese stock market also crashed as well, and this also led to a massive situation where a lot of other countries also had their stock market crash, but we're going to talk about this in a little bit. But I also want to basically explain everything about what's been going on, but even more specifically in simplified terms, because I have already watched other videos talking about this topic, and just, huge love and respect for other YouTubers and, all the information out there. But I've also found a lot of the information relatively confusing. So in today's video, I want to basically describe what's happening, but in a hopefully easier to understand way. So if you guys hopefully enjoy that or want to see more videos like that, consider subscribing, hitting the bell. It's free, it doesn't cost anything. You guys get free information in exchange, and it helps to grow the channel and help out in general. Just, it's really appreciated. If you guys want to, of course, like, subscribe, and let's just get this video started. So when it comes to several reasons why the stock market crashed about 2 to 3 weeks ago, and why it might potentially crash in the coming future as well, is really because of the fear of a recession that's going to be coming up relatively soon. Now, this video is not to say that a recession is coming, but what it is to say is that because there is a fear of a recession coming, this is going to potentially cause the stock market to crash, because a lot of times it's also about anticipating what the future is going to hold, and the stock market does not like uncertainty. And when you are in a situation where there's a lot of uncertainty to where our economy is headed, it's going to lead a lot of volatility inside of the stock market, and in some cases volatility downwards, which is what's leading to the crash right now, which is probably a really great segue into the next point that I really want to talk about, which is really about another reason why there was a lot of why the stock market crashed, was also because of the really poor performance when it came to the jobs report. Now, I've made so many videos talking about the jobs report, which I'll put at the end screen so you can watch it after you watch this video. But the bottom line behind the jobs report is that the recent one that just came out, long story short, it just was not very good. I believe, if I remember correctly, is that they anticipated that they were trying to add about 200,000 jobs, but in the end they were really only able to add a little bit over 100,000 jobs. And again, this is not to account for the fact that, a lot of these numbers are relatively skewed, because there are people that dropped out of looking for a job, so they're not counted, they're unemployed, but they're not counted in the statistic because of the definition of what it means to be unemployed. But because of this reason, if people don't have jobs, then it means that people are not really making money. And if people are not really making money, then they're not really investing in the stock market. So when you combine the fact that there's a fear of a recession, it means that there's going to be a massive sell-off, because there's going to be on one end a lot of people that, because of the fear of a recession, they're very afraid that their stocks are going to be crashing down relatively soon. So as a result, they sell their stocks. They sell their stocks to protect their assets. Then you have another group of people that it's not just about the fear of a recession, but it's also the fear of losing their jobs, that are now also going to sell their assets and sell their stocks, because of the fear that they're going to need that money to pay for things like bills and necessities and all the big stuff that we really need to be able to survive, because of the jobs report, as we've just mentioned, about how poor it really performed. Which is probably now a great transition into the next point that I really want to talk about, why the stock market crashed. And it's going to be one of the more important topics, is really going to be about Japan. And this is the part that I think is so confusing when I've watched so many other videos and read so many articles, that I hope this video will hopefully clarify what's going on in simplified terms. Essentially what really ended up happening is that, and I'll actually just throw up a couple articles and maybe read from it, but the idea really is that for the last 30 something years, Japan's economy hasn't been doing very well since the late 1980s, specifically I believe right around 1987. Ever since that year happened, or ever since the stock market crashed during that time period, essentially, and this is the part I had to do a lot of research on, so again, if you guys appreciate that, maybe consider subscribing or watch to the end again to decide. But the idea really is that Japan has been going through a really rough economy for about 30 years now. People, in order to try to maximize and profit off of this, have been taking advantage of this situation by essentially exchanging money with Japan and then exchanging back again to profit off of the difference in Japan's declining currency value. So if that sounds a little bit confusing, I'll use an example to hopefully clarify it. If you take Japanese money and you exchange it for America's money, and again, this is just an example, you can use that money to invest in America's assets. So things such as like America's stock market, bonds, mutual funds, housing, essentially whatever the heart desires when it comes to the world of investing. You can even take advantage of the fact that America is currently going through a high interest rate environment and just basically leave it inside of a savings account to guarantee that you will be able to grow your money, as long as interest rates remain high, of course. So that's the key thing, because they are expected to cut interest rates relatively soon. Then afterwards, when America's assets, or when your investments in America start to increase in value, while Japan's currency weakens and continues to suffer, eventually you sell your assets and you exchange it back again, and then you profit the difference. Essentially, you are making money from the increased value in your investments in America, and then when you exchange back to Japan money again, you are making money again because of the better exchange rates that you are now able to get by going from Japan money, or the Japanese yen, their currency is called the yen, from the Japanese yen to the American dollar, and then back to the Japanese yen again. And that's really the situation to what's happening right now when it comes to making money. However, what is exactly the problem, or why did the stock market crash, and what makes this time different, is that because all of this stuff works as long as the trend continues, until it doesn't continue, until Japan's stock market actually starts to crash as well and things start to reverse. The currency starts to, essentially the currency exchange rate starts to reverse. What happens then is that as Japan's stock market crash, there's a lot of fear that if Japan starts to suffer and a lot of these strategies that I just talked about how people are making money no longer work, or there's fears that it will not work in the coming future, then what really ends up happening is that it leads to a lot of other economies around the world to crash as well. Because at the end of the day, a lot of the economic things that go on in our world are all tied together. Again, this is especially true because we have things such as like foreign trade, right? If one economy is not doing very well, it leads businesses to suffer in that particular country. But when other businesses in other countries rely on those other countries in order to do trade and business and exchanging value and stuff like that, when things start to struggle there, it means that other economies also struggle as well, which is what led to the stock market crash that happened about 2 to 3 weeks ago. And what really is the important thing to take away from this is that because if this is to continue down the line, or we are able to see more uncertainty in the near future, it means that the stock market can potentially crash again. This is even more true because maybe the next point that I really want to talk about is the fact that because the Fed pivot is expected to come soon, and historically from just past experiences, it is relatively known that when the Fed pivots, while it is true that the stock market in the long term will rise, what really ends up happening is that in the beginning though, it starts to actually decline. In other words, is that it crashes before it grows. It will go down before it goes up. And that's just a typical trend that happens historically from personal, historical circumstance or historical times when the Fed pivots and starts to decrease interest rates again. But of course, all of this stuff is just what's going on in our economy. There are so many things that caused that recent stock market crash. It just depends on which one you think was maybe the greater cause. Feel free to comment that down below. But of course, that's really what I wanted to just share in today's video. So if you guys hopefully enjoyed that video, thank you guys so much for watching in the end. Like, comment, subscribe, hit the bell, and hopefully we'll see each other next time. And thank you guys again for watching.